In today's video, I'm covering 4 stocks that you should have on your watch list in 2021. What's going on, guys, and welcome back to the channel. If you're new here, my name is Jason, and on this channel, you'll find videos on personal finance, investing, and money related topics. If you're interested in any of those topics, be sure to smash the subscribe button down below because it does help with the YouTube algorithm and it also helps support the channel. And if you're excited for today's video, don't forget to smash the like button as that also does help with the YouTube algorithm and supports the channel. And just a little disclaimer, I am invested in 2 of these stocks that I'm going to be talking about today. And whenever you're investing into any company, always be sure to do your own research and consult a professional, as I'm not a financial advisor. With that being said, let's jump right into today's video. Hope you enjoy. The first company we're going to talk about is Facebook. And as we all know, Facebook is well known for their social media impact in the world. And as of 2020, Facebook reported 2.7 billion monthly active users. And that pretty much means over 1 out of every 3 people on Earth are on social media. And in less than 2 decades, Facebook has become an $800 billion plus company, and it could easily be the next stock in the $1 trillion club, along with Apple, Amazon, Microsoft, and Google. And if we pull up Facebook's 1-year chart, you can see that the company is up over 30%. And if you look at a more broader view and pull up Facebook's 5-year chart, you can see here they're up over 180%. And currently, Facebook has a market cap of $778 billion. And they've got a beta of 1.19 and a PE ratio of 31.12. And they've got an EPS of 8.78. And if we take a look at Facebook's earnings, we can see here Q2 and Q3 of 2020, they beat their expected earnings. And if we take a look at their annual financials, you can see that their revenue has been steadily increasing year over year, along with their earnings as well. And if we switch their financials to quarterly, you can see that Facebook has done a good job staying steady with their revenue. And taking a look at Facebook's recommended rating by the analysts, currently it's sitting at 1.8, which is a strong buy. And right below that, taking a look at the analyst price targets for Facebook, the average is $321 per share, where currently Facebook is sitting at $273. So there is some room for upside and potential growth over the next couple of years. If we take a look at Facebook's future revenue estimates, and we only take the average and we don't even look at the high or the low, in 2021 they're expected to have $104 billion revenue. And taking a look at Facebook's growth estimates, you can see here just next year their growth is looking at 12.2%. And over the next 5 years, you're looking at 16.60% per year, which is amazing for a company like Facebook. And taking a look at Facebook's profitability, you can see here their profit margin is sitting at 32%, which is really good. And taking a look right underneath, Facebook's return on equity is sitting at 23.88%. And something amazing on Facebook's balance sheet is if you take a look at the total cash that they have, currently they have about $55 billion. And if you compare that to their total debt, it's sitting at $11 billion. So they can easily pay off their debt with the cash they currently have. And the current ratio is sitting at 5.51. And here's why Facebook is on my list of stocks to look out for in 2021. And I'm already holding a position in Facebook, but I'm looking to grow that position further. And I truly believe that Facebook is a great stock to hold long term, because if you take a look at it right now, it's actually trading at a discount of nearly 10% from its peak. And like I mentioned earlier, Facebook has a ton of cash where they can easily pay off any kind of debt they currently have. And in years to come, I do see Facebook easily doubling, which would make for a great return. And the reason why I see Facebook doubling in the next couple of years is if this company already has so much cash laying around, they can easily invest that cash in themselves in order to grow even further. And as we all know, the pandemic that happened last year, and we're still in actually, it did hinder Facebook's ad revenue, because as we all know, Facebook makes their money off of ads and businesses running ads on Facebook. But clearly this was just a short-term thing, and Facebook is definitely going to better utilize their platform of Instagram and WhatsApp. And jumping into stock number 2 is Microsoft. Now, Microsoft does not need an introduction as it's one of the biggest tech companies in the world. By now, Microsoft has become a household name due to the success of its software products as well as its productivity products, such as Microsoft Office and Microsoft 365 Security. With that being said, let's jump right into Microsoft's 1-year chart and see how they are doing. And as you can see, over the past year, Microsoft has increased 40%. And if we take a step back and take a look at the bigger picture and take a look at Microsoft's 5-year chart, you can see that they've grown a whopping 325%. And with being one of the biggest tech companies out there, Microsoft currently has a market cap of $1.682 trillion. And they've got a beta of 0.82 and a PE ratio of 35, along with the EPS of 6.2. And Microsoft also pays a small dividend of 1.01%. And taking a look at Microsoft's earnings, you can see all the way from 2019 Q4 and up to Q3 of 2020, they've been beating their expectations for their earnings. And just like their earnings, taking a look at Microsoft's financials annually, their revenue has just been increasing year after year. And switching over to their quarterly financials, Microsoft has been able to keep their revenue pretty steady. Currently, the recommended rating by the analysts for Microsoft is at 1.6, which is a strong buy. And their average price target for Microsoft is sitting at $241, where currently the price of Microsoft is at $222. So just like Facebook, Microsoft also has some room to grow over the next couple of years. And looking at Microsoft's estimated revenue over the next year, in 2021 and 2022, we'll stay conservative and take a look at just the average estimate. You can see in 2021, they're estimated to have a revenue of over $158 billion. And in the year after, in 2022, their estimated revenue average is expected to be over $175 billion. And just the course of over 1 year, that is some huge potential. And taking a look at the next year growth estimates for Microsoft, they're expected to grow 10.5%. And over the next 5 years, they're expected to grow 14.55% year over year, which again, like Facebook, is really, really great. And Microsoft's profit margin is currently 32.28%, which is a very healthy number to be at. And their return on equity is sitting at 41.40%. And just like Facebook, Microsoft also has a ton of cash totaling over $137 billion. And comparing that to their total debt, which is a little over $83 billion, you can see Microsoft has no problem just paying off that debt completely. And their current ratio is sitting at 2.53. And because Microsoft pays a dividend, you can see their payout ratio is sitting at 33.23%, which is a healthy number to be at because they've got over 66% to invest back into the company. And their 5-year growth rate for their dividend is sitting at 10.13%. And Microsoft has been consistently growing their dividend year over year for 17 years. And here's why Microsoft is on my list of stocks to look out for in 2021. And like Facebook, I also hold a position in Microsoft, but I'm looking to further grow that position. And if we haven't already witnessed, last year in March when the pandemic hit, the whole stock market took a toll, but you can see how fast it bounced back. And during the worst of the pandemic, Microsoft was only down around 27%. And since then, they have recovered over 64%. And Microsoft is known to be a leader in the cloud computing sector because back in 2018, 80% of all enterprises were running their applications through Amazon's web services. But by the end of that year, took over and was sitting at 58%. And Microsoft Azure even won a cloud computing contract with the US Department of Defense that was estimated to be worth $10 billion back in 2019. And the cloud computing industry is expected to hit a whopping $305 billion by the end of 2021. And not only is Microsoft big on cloud computing, they're also growing their esports market. And because everyone was locked up inside during the pandemic due to the social distancing, many video game platforms saw a significant spike in interest, particularly in the esports area. And now that PS5 and Xbox Series X game console just got released back in November, it's virtually sold out everywhere. And over the next few years, the esports market is going to explode. And moving right on to stock number 3 to look out for in 2021 is a company called Solar Edge Technologies Inc. And they're one of the world's leading solar companies that design, manufacture, and sell direct current optimized inverter systems for solar installations. And Solar Edge Technologies is known to make the best inverters on the planet. And in addition to inverters, Solar Edge Technologies has also developed a cloud-based monitoring platform to help manage energy consumption. And if you take a look at Solar Edge Technologies' 1-year chart, you can see that the company is up over 211%. And if you take a step back and take a look at their 5-year chart, you can see that they've grown way over 1,000%. And currently, Solar Edge Technologies has a market cap of over $16 billion, and their beta is sitting at 0.86, and with the PE ratio of 95, along with the EPS of 3.36. And jumping right into their earnings, you can see Q2 and Q3 of 2020, Solar Edge Technologies beat their expected earnings. And if you pull up their annual financials, they've had a healthy revenue increase year over year, along with their earnings. earnings. But if you switch to their quarterly financials, you can see Q2 and Q3 of 2020, their revenue did dip a little bit. And taking a look at the recommended rating for SolarEdge Technologies by the analysts, currently it's at a 2.8, which is closer to a hold. And also the average price target from the analysts is sitting at $257 per share, where currently the price is $319. Just because their price is above the average for the analysts, don't let that scare you away from having this company on your 2021 radar. Because if we pull up their average estimated revenue that they're supposed to be doing in 2021, they're expected to hit $1.74 billion, which is a huge jump from 2020. And also, if we pull up the growth estimates for the next year, they're expected to grow 15.40%. And over the next 5 years, they're expected to grow 20% per year, which is amazing. And also, taking a look at the profit margin, currently it's at 11.55%, and their return on equity is 19.78%. And if you take a look at the current cash that SolarEdge Technologies has, they're at about $1.18 billion. And comparing that to the total debt that they have currently, it's at $615 million. So again, they can easily pay off their debt and still have money left over, and in which they can invest back into the business. And the current ratio is sitting at 4.56. So here's why SolarEdge Technologies should be on your watch list for 2021. Not only does this company sell hardware and software to residential solar installations, as well as their commercial solar installations. And also, SolarEdge has been growing their sales at a rapid pace at about 52% year over year. And they've averaged over the last 3 years about 86%. And if SolarEdge keeps this kind of momentum up over the next 3 years, investors could really see some explosive gains from this company. And as most of you may know, renewable energy has a major advantage over traditional energy sources. And there's also still massive growth potential ahead, because right now over 60% of electricity generated in the US is from fossil fuels, which means there's plenty of growth left for solar. And even with the current 30% tariff on Chinese solar panels that was set back in 2018, which was originally seen as a major setback, and yet solar has still continued to grow. And in 2019, solar energy provided 2% of total US electricity, but it's expected that it'll at least triple to 6% and possibly hit 10% by 2024. And since 2010, solar costs have fallen about 82%, which make it more affordable in form of energy. And analysts are expecting to see that the US solar installation is to grow by 42% from now through 2025. And last but not least, stock number 4 that should be on your watch list for 2021 is Adobe. And Adobe is highly known for their products like Illustrator for creating, editing, and managing graphics, as well as their Photoshop program for managing and editing photos. And Adobe has done a tremendous job on continuously updating what they offer. And they've done a great job of keeping up with the current needs, such as things from working from home, because now that's expected to be permanent for about 50% of companies even after the pandemic. And if you pull up Adobe's 1-year chart, over the last year, they've grown about 50%. And taking a look at the broader picture and pulling up their 5-year chart, Adobe has managed to grow over 470%. And currently, Adobe has a market cap of $239 billion with a beta of 0.97 and a PE ratio of 46.18, along with the EPS of 10.83. And if we pull up Adobe's earnings, you can see here Q1, Q2, Q3, and Q4 of 2020, they beat their estimated earnings each time. And looking at Adobe's annual financials, you can see here year over year, their revenue has been steadily increasing along with their earnings. And taking a look at the quarterly financials, their revenue has stayed steady throughout the quarters of 2020. But if you see Q4 of 2020, not only did they see a slight rise in their revenue, also their earnings exploded. And currently, the recommended rating by analysts for Adobe is at 1.8, which is a strong buy. Because if we take a look at their average analyst price target, right now it's at $557 per share, where currently Adobe is sitting at $500 even per share. So just like Facebook and just like Microsoft, Adobe has a ton of growth ahead of them over the next couple of years. Because looking at their average estimated revenue for 2021 and 2022, you can see in 2021, they're expected to have revenues of $15.2 billion, and that's expected to explode in 2022 with revenues of $17.38 billion. And looking at the growth estimates for the next year, year, they're expected to grow 17.80%, and over the next 5 years, they're expected to grow 16.67% per year. And currently, Adobe has a profit margin of 40.88%, which is very, very good, and they've got a return on equity of 44.21%. Now, the only thing that kind of draws me back just a little bit, but I'm not too worried about it, is if we take a look at their total cash, currently they're at about $6 billion in total cash. And comparing that to their total debt, where they're at about $4.71 billion. So yes, they can still pay off their full debt if they really needed to and still have a bit of money left over. But over the next couple of years, I know their total cash is just gonna grow. Even if their debt grows, they'll still have plenty of money left over. And their current ratio is sitting at 1.48. And here's why I believe Adobe should be on your watch list for 2021 for stocks to take a look at. It's because the global cloud market is expected to grow at about 21% per year. And by 2024, it's expected to be worth about $186 billion. And not only does Adobe have high profit margins, they also have reoccurring revenue. Because they have so many products and services that they offer, they have so many monthly plans, so they have money coming in month after month after month. And over the past 3 years, Adobe has managed to grow its sales on an average of 24% annually. So if you take a step back, this means that they're doubling their sales about every 3 years. And if they keep going at this rate, their sales could manage to go over $21 billion by the end of 2023. And by 2026, they can see their sales hitting a little over $40 billion. And also, Adobe is working closely with Microsoft, which is known to be one of the very best cloud service players. And back in December is when Adobe and Microsoft joined forces, which allowed Adobe Experience Cloud and Adobe Document Cloud to be integrated with Microsoft's Dynamics 365 and Office 365, LinkedIn, and Azure Cloud Infrastructure Services. And in return, this move gave Adobe access to over 180 million of Microsoft's commercial customers. And just like that, I hope you enjoyed today's video. And also, if you made it this far, smash the subscribe button as it does help with the YouTube algorithm, and also hit the like button as it does help support the channel. And with that being said, I will see you guys on the next video.